What's up everyone? We will be doing a consolidated recap of the tech earnings and would also look at Biden's first 100 days in office, and we'll be covering the period from the end of April stretching into early May. So this month has been a very interesting month because most of the big tech reported their earnings. Most investors have recognized the dominance of big tech even more, and they have recognized how impressive it is for such big companies to continue growing quarter after quarter. First off, we'll start with the quarterly numbers from Apple and Facebook. Both of them have smashed Wall Street's expectations. Apple's universe is excellent, from hardware to software and even subscriptions. All have recorded double digits in growth, and Apple's revenue also gained 54%, while profits surged an impressive 110%. Among all these revenue segments, iPhone is also the king. Revenue from the most important product line jumped roughly 2/3 as consumers rush to the company's first 5G phone. Both Mac and iPad also saw strong quarters, growing 70+%. Looking at the breakdown of the sales by region, Asia Pacific jumped 94%, while the biggest market, America, only grew 35+%. On to the next big tech, Facebook. They also blew out earnings with profit jumping by an amazing 94%, driven by higher ad prices and volume. The company's CEO Mark Zuckerberg also said that he expects the ad price hike to continue this year, raking in even bigger profits for the advertising giant. He is also intending to launch many more new products ahead, including Facebook's digital currency and the Novi digital wallet, plus a new feature that could help Instagram creators to make money off creations online. Another piece of interesting news would be also that this month, Apple pushed its iOS 14.5 update, which would give users the right to say no to third-party tracking. As most users would obviously say no, this will undermine Facebook's ability in targeted advertising, and therefore we should expect some bad blood between these two companies in the weeks ahead. Moving on to the next piece of big news this month, it has been around 100 days since President Biden took office. How's his scoreboard looking like? Well, for one, his approval rating is hovering in the mid to high 50s, better than Trump, but below other recent presidents except Bill Clinton. By the way, the number one is JF Kennedy. On the second aspect of his performance, we'll be looking at how the S&P 500 has performed under him. The market seems to welcome Biden more, probably boosted by the massive pandemic stimulus and the incoming infrastructure and social spending plans. Within Biden's first 100 days, the S&P has gained 10%, outpacing those under all other presidents in the last 4 decades. Considering how this whole past year has been plagued by the pandemic, we spend most of our time at home playing games, watching YouTube, and putting our heads online, so it is totally no surprise that Google also boomed. The quarterly revenue growth of 34% marks its fastest growth in the past 4 years. YouTube ad revenue also rose 49%, making it the winner among other social platforms. Lastly, Google Cloud also saw a sizable gain, yet it still remains the third largest cloud service behind Amazon and Microsoft. Microsoft also won big, topping market consensus. It is now nearly a 2 trillion company, just right below Apple at a market cap of 2.3 trillion. Cloud services as well topped 50%, while gaming-related hardware and software was the second largest contributor. Google's share price climbed more than 4% to its 52-week high as investors were cheered up more by its stock repurchase plan. For those of you who don't know what this means, it basically means a company digs into its own capital to buy back its own shares. And one of the main reasons why companies do this is because they believe that their share prices are currently undervalued or at a significant discount. Hence, it would make a lot of financial sense for the company to buy into their own company. Moving back to Biden, he is proposing many things one after another. And as a centerpiece of his big speech in Congress, he is also planning another landmark spending. It is a sweeping USD 1.8 trillion American family plan designed to expand educational opportunities and childcare for families. The key beneficiaries include children and families, where funding will be allocated to childcare, medical leave, child tax credit, as well as students who will start to enjoy free universal preschool, 2 years of community college, and subsidized tuition for university students. Wow. Lastly, the loss from the Archego scandal is now clear, with more than USD 10 billion vaporized into thin air. Credit Suisse took more than half of the loss and Nomura took roughly 30% of the loss. In case you forgot, Archego's capital under the trader Bill Huang's family office made huge bets on tech and media stocks such as JD.com, Alibaba, and Baidu, using money borrowed from investment banks under an agreement known as leverage. Then, all these trades blew up and the lenders struggled to get their money back from the now insolvent Archego's capital. If you want more detail on our thoughts on this blow-up, please do check out the link in the description below. On to another record for this month, Tesla's first quarter revenue jumped almost 74% this quarter, marking its 7th consecutive profit-making quarter. Absolute wow. This is largely in line with Wall Street's expectations, but some of the investors demanded even higher, especially since many people have been criticizing how this massive quarterly profit have been boosted by Tesla's sale of Bitcoin and regulatory credit sales from the cut down in carbon dioxide emissions. However, Tesla reaffirmed that 2021 deliveries will be 50% higher than 2020's. And the thing about Elon is that he always delivers on his promises, even though if he's a few months or maybe even half a year late. But the thing about Tesla is that we have to consider with the ongoing semiconductor shortage around the world, their supply chain remains a threat, and that will make their life more difficult, especially when you consider how their successful transition to full self-driving all hinges on their semiconductor supply. Now, talking about Bitcoin, Tesla trimmed 10% of his Bitcoin investments to boost his profits. And even though his post on Twitter attracted many critics, questioning why he's selling Bitcoin even though he believes in Bitcoin, Elon Musk gave his usual snarky reply saying that it is to prove the liquidity of Bitcoin and the fact that it can be used to facilitate transactions. While it may sound a bit far-fetched, it sounds a bit stupid not to sell a bit of Bitcoin so that they can boost their balance sheet, especially when they're sitting on such massive profits and when Bitcoin is already touching and even breaking past its all-time highs. But the wider market and many retail investors didn't buy into this story, and Tesla's share price dropped roughly 4% throughout the week. This month, we'll start off by recounting Berkshire Hathaway's annual shareholder meeting. It was held over the previous weekend and presented by Warren Buffett, his business partner Charlie Munger, and their beloved Coca-Cola. And yeah, the thing is they often drink Coke here because Berkshire Hathaway is a large shareholder of the Coca-Cola company. The investment tycoon's annual show is always regarded as a must-watch for investment professionals. But here are 3 points that all of you need to know. The first was that Buffett publicly admitted that the sale of Apple shares last year was a huge mistake. He illustrated this using a simple example: cars versus Apple devices. People would rather choose to give up their cars if they were forced to make a choice, rather than give up their whole Apple ecosystem. Munger also seemed to agree on this point. Selling airlines was deemed as another mistake by some investors. Remember how Buffett dumped his ownership in the airlines early 2020 during the March crash, such as American Airlines and Delta Airlines? But later those stocks rallied nearly 50% till the year end. But he still didn't buy back any and continued to sit in denial. Buffett reaffirmed that he wouldn't buy back any airlines given the pressure from COVID. The second key point he mentioned during the meeting was how meme stocks like GameStop and AMC were a gamble. The market frenzy last year makes a lot of people think investment is easy, and Buffett thinks that's blatantly wrong, and at least it is not as easy as it sounds. He would rather think that for those who rushed into GameStop, they're essentially gambling, whereas trading platforms such as Robinhood, who are providing zero commissions, are encouraging gambling impulse. The last point, and surprise surprise, he said Bitcoin is disgusting. Just by looking at his words, you can know how much Munger hates Bitcoin. He said Bitcoin was contrary to the interests of civilization and it is a financial product invented out of thin air. While I do share some of his sentiments, I do believe that there is hope in the blockchain. But cryptocurrencies are a wrong manifestation of the best thing that could happen out of the blockchain. But on this channel, our position is that we still believe that the blockchain and the technology behind creating the blockchain can lead to many positive changes in our society. For Buffett, he didn't want to answer the Bitcoin question as he didn't want to declare a war. Moving on to our next piece of major news this month was that Facebook is teaming up with Spotify. Have you ever felt annoyed switching back and forth between Facebook and Spotify whenever you want to scroll through your social media feed or listen to music? Well, I feel the same way. But this month, they introduced a new function called Mini Player, which is simply a mini Spotify inside the Facebook app. As a Facebook user, if you click on a Spotify link shared by others, the Mini Player will pop up as a little bar and start playing, and there's absolutely no need to go through the hassle of switching. The only condition here is you need to first install and register on Spotify if you have never used it before. Free membership works, but with ads and only in shuffle mode unless you pay. But the question here is, why did the two team up? Because teaming up literally means more growth, larger user base, and ultimately more revenue, and that's a win-win. But there are definitely some monopoly concerns, especially since Google's acquisition of various streaming devices have put them under antitrust spotlight. For Facebook, playing with built-in bars equals you spending more time on Facebook, which is more ad revenue. And on the other hand, for Spotify, with easier access to mini Spotify, it also means more ad revenue and more users. And perhaps one more reason why Facebook and Spotify decided to team up was that they both hate Apple. Facebook's advertising ability was hurt by the new iOS update, while the long-lasting Apple-Spotify dispute is still going on. Perhaps a partnership can probably help them to better compete with Apple. From our perspective, it means no swiping away and better user experience. Moving on to the next piece of news, Sony and Discord have announced a partnership that will integrate the latter's popular gaming-focused chat app with PlayStation's own built-in social tools. This is a big move and a fairly surprising one, given how recently acquisition talks were in the air. Sony appears to have offered a better deal than Microsoft, taking an undisclosed minority stake in the company ahead of a rumored IPO. The exact nature of the partnership is not expressed in the brief announcement, but the closest we come to hearing what will actually happen is that the two companies intend to bring the Discord and PlayStation experiences closer starting next year. Discord has partnered with console platforms before, though its deal with Microsoft was not a particularly deep integration. This is almost certainly more than a friends can see what you're playing on PS5 and more of a this is an alternative chat infrastructure for anyone on a Sony ecosystem. Chances are it will be a deep system-wide change but clearly Discord branded option, such as start a voice chat with Discord option when you invite a friend to your game. The timeline of early 2022 to finalize this acquisition also suggests that this is a major product change, probably coinciding with a long-term update on Sony's long-term PS5 roadmap. Another interesting company was Squarespace. It will go public on the NYSE through a direct listing with a valuation of over $10 billion. If you have heard about Wix.com, Squarespace is a similar one, a drag-and-drop website builder that can help anyone build a fabulous website. Using the website is free, but if you want to get more advanced options, Squarespace charges us on a monthly basis. Its revenue jumped 23% in 2020 thanks to the e-commerce boom, and unlike other tech startups, it is actually profitable. But they still need to hire investment bankers and advisors despite the fact they are going through direct listing. For Squarespace, Goldman, JP Morgan, Barclays and RBC Capital are on the list. The last piece of news this month was how the global healthcare industry is going through an earthquake as the US government suddenly announced its intention to give up its COVID vaccine patent protection. All COVID vaccines are protected by patent to ensure vaccine developers can generate enough money to cover their heavy R&D investment. Giving up this patent means that anyone could literally copy this technology while prevent themselves from being sued. Although this could help speed up the vaccine production and roll out globally, which is a big win for emerging countries such as India and other poorer countries that can't afford the vaccine, wealthy economies were strongly opposed to this, including the EU, UK, Japan and Switzerland, because of the fact that most of the vaccine companies are based in the richer European countries and that they can't make as much money if the patent were to be removed. So Biden made a sudden U-turn because of the backlash due to his decision. Most of the vaccine makers all went mad because giving up this protection likely meant vaporizing tens of billions of profit. Just to throw in some numbers, Pfizer generated $3.5 billion from COVID vaccines and is expected to make almost close to $15 billion from this. Moderna still made $1.7 billion during the same period. Germany's BioNTech and CureVac lost nearly 20% of their market value, while Pfizer was down 3% pre-market after this news was announced. But the thing is, even though Biden proposed giving up the vaccine patent protection, it doesn't mean that producing a vaccine is so easy. It requires not only the formula and technology itself, but also production and storage capabilities and even sufficient raw materials. So knowing the formula does not mean that they can straight away produce the vaccine. Take the widely used Pfizer vaccine as an example. It needs 280 plus materials from 86 suppliers across 20 countries. Plus it needs to be stored at a temperature of negative 70 degrees Celsius. And very few countries have that kind of ultra-freeze capability. So to conclude, Biden still has a long way to go. And that will be it for this week's long recap. Hope you enjoyed it and stay tuned for our next video. invest, save.